October 18th, 2023. Generally, channels last 150 bars or 2 days, or a maximum of 150 to 200 bars in 2 days. And you can see this channel is 126 bars long in about a day and a half. Overall, I think this channel is probably done for the most part. So I would be interested to see what happens tomorrow. Generally, channels are bull flags, so a bear channel is bull flag. So you assume 75% chance tomorrow we're going to get at least 2 hours of sideways to up trading, and 25% chance that we just get big follow through tomorrow, big bear bar closing near its low. You can see on the daily chart, well, it was, but it's some sort of low too on the daily chart. So some traders will be selling below here, hoping that we're going to get a collapse down to maybe this high. But just I would say pay a lot of attention to what happens around yesterday's low, or I guess, so tomorrow, this would be yesterday's low. So pay a lot of attention tomorrow to what happens when we get around this low, see if there's a big rejection off and an attempt to bounce. And speaking of which, yesterday I mentioned that I thought we might try to rally this morning. And you can see we tried to on bar 10. We got a big breakout of a tight trading range. And when that happens, you got to be thinking about what the profit target could be. And I mentioned I thought this is bar 37 from yesterday, but I thought that would be a reasonable profit target. And you can see that 2 to 1 of bar 10. So if you take 2 times the height of bar 10 up, that's about where the low of 37 is. And that's because computers are trying to drive the bar up as it's forming to make it big enough for traders to want to buy, but they want to make sure that they still leave enough room for a reasonable swing trade. And so that's, the reason why that profit target is there. Similarly, on bar 43, you can see we had trap traders at the bar 11 low, a 1 to 1 of bar 43. It's basically right at that 11 low. And that's, same reason computers, they make the bar big, but they don't want to make it too big. That's unreasonable to buy. This bar was still a little bigger than I wanted it to be, but point being, now you have a reasonable 1 to 1 equation to get to this low, and you should get fast follow through if it's going to get there. And disappointing follow through was kind of the theme of the day for the bulls. If you buy above 10, why is, if this equation is so good, why is 11 bad follow through? And you can see traders started exiting during 12, and this trapped a lot of bulls in. 43, great bull bar. Hopefully we get follow through, but why is 44 and 45 not very good follow through? They should be better. They should have less tails in the tops and bottoms. You want stronger follow through. You want a bar like 31 after a bar like 43. And so when you get 46, a lot of bulls are going to exit below 46 because while this is strong enough for a second leg, your premise was that we were going to pretty much race straight up to the 11 low. And we shouldn't be getting a bear bar if that's what's going to happen. So a lot of traders would exit below this low, and that makes this a possible bear bull trap. And this was a second leg trap as well. I thought this was really interesting, but I'll get to it later. Bar 1, bull bar closing near its high, but tail on the top, so not all that good. This was also kind of a leg 1. You could argue it was a leg 1, leg 2 kind of day. Leg 1, pull back 2. So I think that's a reasonable argument too. But it's hard to want to sell. Or I guess it was somewhat hard to get short for that big of a measured move because you probably would have been stopped out beforehand. Hard to hold short is what I was trying to say. Part 2, inside bar, potential swing sell. You know that this gap from yesterday is still open, and this is all probably a trading range. So we're probably at least going a little bit lower to close this gap around that high, which pretty much happens right when 2 triggers. You get some follow through on 3, but it's not that good. If you're selling below 2, you want a bar like 12. You want a big bear bar closing near its low. Getting small follow through on 3 is really not ideal for this trade. And so a lot of traders will exit basically at the low of 3 if they can, and that causes an outside up bar on 4. 5 is an inside bar. It's a micro double bottom. Maybe you can buy above 5, but I don't think it's all that great. I think it makes more sense to just wait. If you're going to get, if you're buying above 5, you're essentially hoping that we're going to get a big bull trend. If we're going to get a big bull trend, you're going to have a lot of other opportunities to buy. So it's better to wait. 6, follow through for the bulls, but it's not that good. Why is there a big tail on the top if this is, so strong for the bulls? If this is what you thought it was going to be, then this should be racing up. And so when bulls see that, a lot of them exit their longs, and that's what causes the selling on 7. Limit order bulls will step in knowing they can probably buy below here and scale in lower and make money. You can see we essentially tested this high yesterday, or tried to. Was it exact? I think it's 1 tick off. 72.25, low, 72.50. So we essentially tried to test this high from yesterday, and we found buyers. Bull bar here, but essentially just anyone who bought up in this area is allowed to break even. It's a tight trading range, so just wait for a breakout. The daily range is probably going to double or triple at this point, so there's not really a big rush to get in. 9, it's a bear bar. It triggers the low 2 sell below 8 for the bears, so they're hoping it's essentially a spike, and this is the pullback, and then we're going to get some sort of channel down, but it's not likely. This is a bad sell below. Double bottom with 9, basically 7, 9 double bottom, but not very good with a bear bar. And then you get 10, and 10 is a really interesting bar. It's a really good surprise for the bulls. I thought it was a reasonable buy, hoping that you're going to get a swing up. But you also have to keep in mind there's the bear case, right? Keep in mind this is a tight trading range, so a lot of times tight trading ranges are going to fail. There's about a 50% chance that the breakout of a tight trading range is going to fail. And the problem with buying tops of tight trading ranges is the failures can be pretty dramatic, like this was. This is also, if you look at it, 1 pullback, 2 pullback, 3. So it was a climactic third push up on bar 10, which is the bear argument. I still thought the bull case was strong enough that you could take the buy, but maybe I'm wrong. Who knows? Follow through on 11, but it's not all that great. It's a small bull bar. Generally, you want better follow through, but early in the day, so maybe still okay to hold. And then you get 12, and 12 would stop out pretty much any bulls who are in for any reason. If you're fast, you can start to get out as this starts to turn down. We probably shouldn't go for a measured move down of this bar if your premise of a bull trend is valid. I don't think there's really any reason we would get to this far. So some traders would have a stop, a measured move down of bar 11. But a lot of traders are going to get stopped out with a full loss when it moves that quickly. And because you have a lot of bulls getting stopped out, a lot of bears are going to sell below 12 because the always in has clearly flipped. I think it was always in long on 10, but then bad follow through 11, big bear bar on 12. So maybe reasonable to sell below 12. Follow through on 13 and 14, but tails on the bottom. And you're wondering if limit order bulls who bought below 7 are going to be able to buy more lower and make money. I just want to check something. Okay. You're wondering if limit order bulls who bought below 5 and are buying more lower are going to be able to make money. You can see they are able to on 15, so it's less strong for the bears. 16, it's still always in short, which is notable. And you got to keep in mind there's a 90% chance we break out of the 18 bar range. So after you see the close of 16, it's a low 1 short, and you got to be thinking how high are we going to go if we bounce? Even if we were to bounce right here, probably not going to go that high because 90% chance we're breaking out of the 18 bar range. So it'll probably be to the downside. 17, big follow through for the bears. Some would argue it's a second leg trap. And then you get 18, bull bar, but it doesn't quite close near its high. I don't think you have to exit above 18 if you're a bear. Follow through on 19, but it's probably not all that good. Traders who sold to close at 17 are obviously disappointed with 18 and 19. Think about if you sold down here and then saw this, that's not ideal. So when you get 20, some traders would be hoping to sell below, but you're selling at a better price than the reasonable sell to close trade. When the market's giving you a better price, a lot of times it's pretty suspicious and you don't want to take the trade, especially since 18 and 19 were pretty strong and they're probably good enough for a second leg. 21 touches around the close of 17, so traders who sold here scaled in higher and exited their first position at break even and their second position with profit. 2021, it's a double bottom, but why does 21 have a big tail, right? If this is going to be good for the bulls, you would think that 21 would be better and it wouldn't have a tail on the top. And both of these bars have tails, so it's 1 pullback 2 and 1 pullback 2. So these both could potentially be second leg traps at the top of a trading range. So that's why you get bad follow through on 23 because bulls aren't really willing to buy. And it's a second leg trap on a lower time frame. 24, essentially another attempt up for the bulls. You could argue it's 3 pushes, 1 pullback 2, pullback 3, but either way, big failure for the bulls and a bear bar closing somewhat near its low, but not quite closing on its low. And this is, it's a triangle. When you start to get triangles late in trends, you should be wondering if it's a final flag. Similarly with II, like this II after a sell climax, that's a pretty good buy. And this whole thing turned into a triangle, which I thought could have been a final flag for the bears. And I thought it was possible that we got a decent bounce late in the day, but we just didn't end up getting it. 25, essentially bad follow through for the bears who sold below 24. So a lot of those bears who sold below 24 at this point 25 are exiting around break even, and that causes the bounce on 26. 27, a bear bar closing near its low will probably break out of the 18 bar range, but I'm not sure how much lower we're going to go. This is reasonable enough that I think if we get to a new low, bulls will be able to buy the new low, buy more lower, and make money. 29, bad follow through for 28. I think, bulls who were front running might exit below 27, but mostly just bulls exiting, less bears selling below 27. So when you get fall through like 28, a lot of those, there's not as many bulls left. When you fall through like 29, not any bulls left to sell out of longs. 30 is interesting. So it's 1, pullback, 2, pullback, 3. So it's a third push down. So it's really not all that great of a short. And this is just a tight trading range and a mess in general, and you shouldn't be trading it. 31, failed breakout of the 18 bar range. It fails by 1 tick. I think I have other examples of failed breakouts of the 18 bar range. And then breakout in the other direction. So let's see what this one is. So this is a failed breakout of the range, I suppose. Here, failed breakout of the 18 bar range on 25. Here, you can see this was actually a couple days ago, I think. Yeah, like last week, we get a failed breakout of the top of the 18 bar range, and if it reverses within 3 bars, oftentimes it'll try to test the other direction. So we got a 1 tick failure, breakout of the 18 bar range, and a big bull bar, but it's not quite able to close on its high. If it did close on its high, I think it's a credible swing buy, thinking we should at least get here, and bulls will buy above it, thinking that we're going to get good follow through. However, think about how disappointed you are as a bull when you see the tail on the top. Why is there a tail on the top if this is strongly bullish? There shouldn't be a tail on the top. And so a lot of those bulls, think about if you just bought 1 tick below this, a lot of those bulls got in right here, and then we got a big reversal up, and now they're disappointed that this bar has a tail on the top, and so they start exiting their longs, and that's what's happening on 32. Limit order bulls who got down here are exiting their longs. Other limit order bulls will be buying a 50% pullback, hoping we're going to get 1 pullback and then some sort of good second leg up. But you can see it didn't end up happening. And one of the reasons it didn't end up happening is because bulls who bought the close of 31, hoping that it was going to rally anyways, are disappointed in 32, as they should be. And you can see they're exiting right around the close of 31 during 33. And that causes the bear bar closing near its low. Any bulls who are long for any reason, I think, are going to exit below 33. And that's why I think it's a reasonable sell below 33 to get follow through 34, 35. 36 lets limit order bulls who bought below here buy more lower and make money. But they can only buy a couple points lower. We didn't quite get the 5 point, buy more 5 points lower until here. And we get an II on 36 and 37. So again, we're deep in a trend. When you get an II, you probably got to wonder if the trend is coming to an end. More follow through on 38, but then disappointment on 39. Bears were hoping this was going to form into a micro channel. You can see we got the spike, and then we're in the channel phase. Bears were hoping that we were going to get a strong break below the channel, but not all that likely. 40 inside bar, some bears who were stopped out above 38, some more, again, below 40. And then you get, a massive surprise bar on 43. When you get these big surprise bars, a lot of the times I think it's because you've had buying pressure building up all day. You have this good bar, these are decent, this good bar. So when you have buying pressure building up all day and it's 3 pushes down, 1 pullback, 2 pullback, 3, a lot of bulls, a lot of bears, once they sense the market is starting to race up, they're just going to start covering shorts at the market, thinking, they're selling in here, but they're all being pretty cautious. And the moment that it starts to race up, those bears are going to start covering in a panic, and that'll cause the bar to get too big. And that's why, bars get too big a lot of times in trading ranges, is because traders are panicking in and out of trades, and that causes big swings. But oftentimes it happens too fast for you to get in. And so, while this bar is good, I wasn't expecting it to be so large. And trading range, like here, trading range bars often get really big. So you're worried that this is just going to be a trading range. And that's the problem with trading in trading ranges, bars like 49. Follow through for the bulls on 44 and 45. But like I mentioned, the tails are really big. If you're buying above here, you want high probability that we're going to continue to race up. So why are we getting bad follow through? And when you get bad follow through, do you have to exit below 46? I think that if you're an always in trader, you probably have to exit below 46 because your premise was that we're going to race up and we're clearly not doing that. So you could hold with the premise that the bulls are going to get a second leg up, which is true. They probably will, but you're going to have a stop down here if you want to be buying, holding long through here, which is the same as buying at the market. Um, Holding is, if you're long here and then it's here, it's the same thing as buying right here. You're saying the same thing. I think we're going up. If you're so, you shouldn't be holding a trade if you wouldn't willingly buy it at the market right now. So I think a lot of traders will exit below 46 because they don't want to deal with a potentially really deep pullback, which is what happened. So some follow through on 47, some follow through on 48. Some bulls will hold, but a lot of times after 3 bars against traders, a lot of them will exit their longs. And that's kind of what happened. You get 45 and 46 and 47, and some bulls will hold with probably a pretty tight stop, like somewhere down here, hoping that we're going to get a bull close and that will start to rally. And then when you get just 3 disappointing closes in a row, a lot of traders just flatten their position at the market, and that's what happens on 49. And additionally, the 42 high, a place where some bears sold above and should be able to scale in higher and get out a break even. I actually thought for the majority of the day that we were going to get back to this 11 low. So, I don't know when we're going to get back to that, but if we do get back to that, I do think that there will be some profit taking at that point. So let's just talk about 49, follow through on 50, but into major support. And then you get 51, 52. 51, 52, it's an inside pattern after a sell climax. I have them in here somewhere. I'll see if it's in a subfolder. No, nothing. All right. I'll have to look for that file because I do have an inside pattern after sell climax. But generally, some bulls are arguing here at this point that it's a trend line break, and hopefully a major trend reversal. I think that's a valid argument, considering it's a trading range day, and sometimes in trading range days you get vacuums back to the open of the day and maybe back to this low. So inside 51, 52. I think it's okay to buy above 52. 51 maybe as well, but it's just more aggressive. But 52 after an II pattern, I think it's a reasonable buy above 52. You get good follow through on 53 and 54, and then you get 55. 55. So the bull argument is that it's a higher low major trend reversal, and that we're just gonna continue rallying. And a bear bar here damages that because that makes you think that we're gonna get 1 pullback, 2, and a second leg trap. Now this is pretty steep, so if this bar is able to close strong, in my opinion, if 56 closes strong, then the bull argument is stronger than the bear argument. So the bull argument being that I think we're going to continue to race up. Bears were seeing a second leg trap, and they managed to sell the bar off. And with this big tail on the bar, that greatly increases the chances that this is just a second leg trap and not going to be a strong rally. If this bar closed strong, it might still be a second leg trap, but I think the odds are much better that we're going to continue to rally up if this closes strong. Additionally, 55 closing a bear bar was a problem as well. If 55 closes a bull bar, some traders will still see this as a pullback, but a lot of traders will just say, well, it might be a pullback, but we have a lot of bull bars. So, if we continue to race up, I'm going to hold. But what happened was you got a bear bar. So when we started to race up, a lot of those traders got afraid that the bears were going to sell, and they scalped out. So a lot of when these bulls who are buying are scalping out, that's what's causing this big tail. So in a way, 55, I think, caused the trap on 56 or contributed to it. 57, it's a low too short. First pullback, second. So potential sell below 57. I think it's a swing short. I don't think it's all that great. I think it's swing short. I don't think the probability is super high that you're going to get a measured move down. It's what I should have said. You're forming some sort of triangle here. So you can't be too sure that this is going to work. But it's reasonable. Follow through on 58 and then bad follow through 59. Small bear bar 60. Again, you're just at the apex of a triangle now. So, basically wait for a breakout. Bad follow through for the bulls on 61. Bulls try to get a breakout up, failure, and then follow through for the bears on 62. Probably an okay sell below 62 for a swing. But if you sell it, you need to be exiting above pretty much any bar. If you get any kind of bull bar, you need to get out, in my opinion. Especially early. But follow through on 63 is okay. Follow through on 64 is okay. Follow through on 65 is okay. But none of this follow through is really all that great. It's all really, really sideways. Tail on 63. There are small tails on 64, small tails on 65. It just seems more like it's going to pull back rather than break strongly below this low. When we trade below this low, you have to be thinking that bulls who buy below here and buy more lower are going to make money. So maybe not as good of a sell in the close of 65. Pull back on 66. And then you get follow through 67, 68. It could be 3 pushes down. 1, 2, 3. We could get some sort of climax. 69, reversal attempt, but I think we're just gonna get back to the 66 low and find some sellers like we did here. Why? Because they bought below 66, a bull bar. They bought more lower. They should make money. They do. So you can look at 69, 70, and 71 as 2 legs up, right? Up to this high, down, and then back up. So 2 legs up. That was a crude drawing, sorry, and then to the 66 low. And I think 73 is interesting because bulls might try to buy above 73 and bears will definitely exit above 73, hoping it's double bottom, bears knowing it might be a double bottom. And then when you get a failure on 74, suddenly all those bulls are trapped. They're exiting below. Bears are going to sell below. And you can see we get a quick 10 points and then profit taking. For always in, I thought it was okay to buy above 10. But you have to be aware it could be a third leg up in a trading range. I thought it was okay to sell below 12. Probably 33 was okay. I thought buying above 43 was okay. I thought 52 was okay, 57. And you could sell this close or sell as we go lower. On the daily chart, it's an attempt at a low 2 short for the bears. So bears want follow through. Bulls are going to try and buy below yesterday's low and hope we get back to this low. Realistically, the bulls who buy below here and scale in are probably going to make money. So I suspect we're going to get back to that low at some point. And yeah, potentially a low 1 forming for the bears on the weekly chart, but we'll see how that finishes up.